Hello, friends. Good evening to all of you, and welcome to Learning Sessions. Today, in this video, we are going to start with the new chapter from the Module A of the BFM CAIIB, which is RBI, Exchange Control, Exim Bank, and the FEDI. So, we are going to learn about each and everything about the Exim Bank, the role of the Reserve Bank of India. That's a very important one, right? So do confirm the audio video quality at the earliest. And if you have not gone through the previous videos, previous lectures of CIIB, because this is the 35th lecture, and we have been providing the lectures almost on daily basis from Monday to Saturday, except the Thursdays, right? So you can be watching the videos. Just download the application from the link iibf.info/app. This is the link from where you can be downloading the application, and if you are facing any issue related to it, you can simply be WhatsApping to the number 83609 writing CAIB, and I'll be sharing all the details to you. So let's focus on the chapter now. The audio video quality is working all fine. So it's about the chapter RBI Exchange Control, Exim Bank, and the FEDI. It's about the chapter number 8, module A of the BF. So first of all, let's learn all about the Exim Bank. Exim Bank is a Export Import Bank of India. This is a Export Import Bank of India. That is a Exim Bank, and it's a specialized financial institution which was actually established so as to promote the international trade, and it was established in the year 1981. So what was the main objective related to that? It provides financial assistance to the exporters as well as to the importers. So one, it is related to providing the financial assistance. Kindly note them all, right? So the first one, it's about the financial assistance to whom? The financial assistance is provided to the importers as well as exporters, and it promotes the India's exports and international trade. It facilitates overseas investment. Like if you want to do the overseas investment, it's going to promote the same. It's going to promote the same. It specifically provides the support to the small and the medium exporters also. So what are the major functions? Export finance, import finance, overseas investment finance, project export finance, advisory services. These are the major functions which are performed by the Exim Bank. And that's our next topic. That's about the functions and operations. So first one, it basically do offer the finance, the export finance and import finance, and also it develops the alternate financing of solutions, that if they are not going to provide the finance, then who can be providing you with the finance? They also provide the useful information data, and also do provide the advisory services. They also do provide the advisory services to the exporters in India, right? They do provide kind of opportunities to Indian exporters, and they do provide the knowledge base, that how you can be internationally competitive, how can you be doing the production, financing, marketing cost can be reduced, and further you can be internationally competitive. And what are the problems which are faced by the exporters? They do respond to it. They do respond to it. So what are the different activities which are undertaken by the Exim Bank? It's a financing programs, deferred payment exports, assistance to provide the projects, and for the other service, and for the line of credit programs for the other particular countries. So these are the different services. Let me explain the different points to you so that you can be having an idea that what Exim Bank is actually working. So first, it's about the financing program, like pre-shipment credit, post-shipment credit, export marketing finance. These finances are provided. So whether we're talking about the pre-shipment credit or packing credit limit or post-shipment export finance, these are provided by the Exim Bank. And if you're talking about the deferred payment export, it means providing the support to those exports where the payment is not going to be received in one shot, and the payment is to be received in multiple long-term period. Like the exporter has done the export capital goods, and he's going to receive the payment in the next 5 years, half yearly basis. Then Exim Bank will come in picture so as to provide the support to the exporter. They will be providing the payment structure, right? They can be providing the financing to the importer also, right? Overseas importer also. So that can be done. And other than that, it's related to assistance to project exports and project programs. Like Exim Bank is going to support the Indian companies executing large projects abroad. And if you're talking about the other services and programs, like they that may be including different services like advisory services are being provided, and technical support can be provided, innovation support can be provided, right? So that can be done. And the last one, it's about the line of credit program for the other countries. Now, Exim Bank actually provide the LOC to the foreign governments, to the financial institutions, to the regional banks, so that they can be promoting the import from India. Like here is Exim Bank, and it's going to provide the LOC to the government outside India, to the financial institution outside India. Now, these financial institutions out of this LOC are going to lend money to the importers in their country who are going to import from India, who are going to import from India. So, in a way, the exports from India will increase. The exports from India will increase. So, these functions are being performed. Now, let's learn in detail about the financing programs first of all. For exporters as well as for importers, let's have a look at it. First one, it's about the supplier's credit. Now, what is supplier credit? The seller's credit. Now, if the exporter itself is extending a credit to the importer outside India, that's basically a kind of loan, short-term loan, which is given by the exporter in India to the importer outside India, right? Second one, it's about the consultancy and the technology services. That's a support, like financial assistance is provided, right? But also the technology support is provided. Then also they're going to provide the pre-shipment credit, the credit need which is basically there before the shipment of goods, that's also provided so as to execute the contracts. And also project finance for export oriented units, to the export oriented units. Not the term loans will be provided for the long purposes, for the long purposes where the export oriented units are there, which are then the EPZs, like the export processing zones. In those particular zones, whatsoever the annual sale is there, and 25% of their annual sales, a minimum loan will be provided, right? That's a project finance that can be provided. And also it's a import finance. Import finance is basically related to financing of imports. Like if you want to do the exports, you also may be requiring the raw material, right? And if you want to import the raw material, the finance will be provided to you by the Exim Bank, that you can be importing the raw material for the export purposes. Then the overseas investment finance. What is overseas investment finance? Like if you want to invest outside India as a equity participation or a joint venture outside India, or a wholly owned subsidiary outside India, Exim Bank can be providing you the finance, and they are also going to provide you finance for the medium term and long term basis based upon the export bills, like through the forfeiting. Like we read about the factoring, na, which is there domestically maximally, but forfeiting is in international market. So Exim Bank, through their forfeiting, like let's say we can say subsidiary, they are going to discount your export bills, which may be for long term period or medium term period, right? And also the Exim Bank also allows the finance in foreign currency at the competitive interest rate. So it's not the case that they are going to provide you rupee finance only, that they can be providing you with the foreign currency finance. They can be giving you the foreign currency finance also. So that can also be done. Clear so far? After that, it's about the four commercial banks. The first one, it was related to what? For exporters and importers, the financing programs. And the second one, it's about the financing programs only. Again, it's about the financing programs, but it's for the commercial banks we are talking about. So first one, it's about the export bill rediscounting. Now, what is rediscounting? The bank has already discounted the export bill and provided the finance to the exporter. Now, the bill is basically assigned to the bank. Now, bank will be reassigning it to the Exim Bank and will be taking a refinance facility from the Exim Bank. So, in a way, bank is going to free up its capital basically when the exposure was on the exporter, it was related to exposure, related to exporter only. But now when the bank has taken a rediscounting facility from the Exim Bank, it's a bank to bank exposure. So as per the Basel 3 guidelines also, in case of bank to bank exposure, the bank is to maintain the lower capital. That's the first benefit that will be available. And the second benefit would be that the bank will now will be having the liquidity with it. So that's through the export bill rediscounting facility. The second one, it's about the small scale industry export bill rediscounting. That's also the same, but for the small scale industry units. Now, the small scale industry unit, which has basically drawn the bills, those can be rediscounted with the Exim Bank. The third one, it's about the refinance of the export credit. Refinance of the export credit. Now, let's say a deferred payment loan was allowed by authorized dealer bank, right? So here was a authorized dealer bank which allowed a deferred payment export loan to the exporter, particularly, right? So based upon the bills which were to be received on multiple tenors, on multiple time horizons, a loan was given by the authorized dealer bank. So that can be refinanced by the authorized dealer bank with the Exim Bank. And for the refinance of the term loan, let's say if a term loan is given by the bank for a person who is eligible under the export oriented units, right? Or let's say it's for the computer software exporters purpose, for capital good purposes. Now, if a loan is given, if a term loan is given so as to procure the capital goods, not for the exporting purposes, but if you want to basically provide the services, and if you want to set up a plant, and for that particular purpose you have taken a term loan for the capital good purposes, and the authorized bank has given you that particular loan, so that can be refinanced with the Exim Bank. Then it's related to the Exim Bank also do participate with the commercial banks in India so as to issue the guarantees, like the guarantees to be issued on behalf of the exporter to the importer outside, that if our advance payment will be received, the shipment will be made. Like such kind of guarantee can be given, or it could be related to performance guarantee, it could be the retention money guarantee, or it could be the guarantee that's related to the customs department is to be taken. So Exim Bank also going to participate in such guarantees. So what are the different facilities for the commercial banks? The one it's related to the export bill rediscounting, then SSI bill rediscounting, then it's the refinance facility for the export credit, refinance for the term loan, and the guarantees which are provided by the Exim Bank. Clear so far? Then after that, it's related to the financial program. Again, starting with the financial program, but this time not for the importer exporters, not for the commercial banks, but it is for the foreign governments and foreign importers and the other institutions and the other institutions. The one it is the overseas buyers credit. Now, what is buyer credit? Let's say we are talking about the importer only. Importer only. Importer is, let's say, outside India. And here we are having the exporter here in India. Now, the importer will be importing if they will be having the finance with them, if they will be having the liquidity or money with them. Now, importer is basically getting the finance connecting with the Exim Bank. Now, Exim Bank is basically providing a direct finance to the importer, to the importer. And through that particular money, the importer is going to basically import the goods from India, from the Indian exporter. That is basically the overseas buyer's credit. The funda related to buyer's credit means that the importer is going to avail the loan or the liquidity from the overseas institution. Now, in that particular scenario, the Exim Bank is going to act as that particular institution. So that's about the overseas buyer's credit. First thing. Then it's related to the line of credit. Now, line of credit can be sanctioned by the Exim Bank to the government outside India, to the financial institution outside India, so that they can be offering the finances for the import from Indian exporters. That can be done. And for the re-lending facility to banks overseas. Now, like Exim Bank basically can be allowing this facility that the Exim Bank is going to finance to the international banks, and the international bank is going to finance the loans to the individual parties so that they can be importing the Indian goods. So that's basically re-lending facilities to the banks overseas. Clear with it? So that's about the financial program, right? For the financial program on behalf of the Exim Bank. So when we talked about the financial program, it was in three tranches. One, it was related to the importers and exporters. The second one, it was related to the commercial banks. And the third one, it was related to the government or importers, right? Or financial institutions. Overseas, we are talking. After that, the next topic, it's about the deferred payment exports or the project exports. Deferred payment export means what? That you are going to do an export. Let's say exporter E is here and he's going to export the capital goods. Now the capital goods are very capital intensive goods, right? And a huge capital is involved. Let's say the importer has paid you a 20 to 25% of the token amount, and the rest of the amount is to be repaid to you, let's say in the next 24 months, the amount is to be repaid. Now, in this scenario, the support will be provided by the Exim Bank to the exporter, right? So whenever the export proceeds are proposed to be received fully or partly beyond the statutory timeline of 6 months, like beyond the 6 months, if you have to receive the receipts, then those are said to be the deferred payment exports up to 3 years only. That is lesser than 3 years only, greater than 6 months. So if you're going to receive the proceeds, if you're going to receive the proceeds like greater than 6 months, but lesser than 3 years, then they do qualify for the deferred payment exports. Now we are having that goods eligible for the deferred payment exports are segregated into two particular categories like Group A and Group B. Now Group A basically is related to capital goods and the production goods, and Group B is related to the consumer durables and the industrial manufacture. So these are the two categories which are available against which the deferred payment basis finance can be available from the Exim Bank purposes, right? And that was related to it. So if any project or loan is beyond the set limits, the case can be provided to the Exim Bank through the lead bank. It's not the case that the case will be directly forwarded to the Exim Bank, but the case will be forwarded to the Exim Bank through the sponsored bank through the lead bank, right? Then it's the case related to assistance for the project exports, turnkey projects, and the construction projects. Now, there are many projects which do require the technical assistance also, like where the on-site work is to be done, where the on-site work is to be done. So, Exim Bank is going to provide the financial support as well as the institutional support to the Indian companies so as to execute the project exports, so as to execute the turnkey projects and the construction projects abroad, specifically we're talking about. And these projects actually do involve the supply of goods, services, technology, expertise, both these, all the things, these things are required. So when we're talking about the project exports, it means it's related to export of the engineering goods, like export of the technical services. Like let's say we are going to set up a power plant. Now, if we are going to set up a power plant, we have to go abroad, and that can be set outside India only. And there you will be requiring the export credit, and there will be requiring the buyer's credit may be required, supplier's credit may be required, the guarantee facilities may be required. So that's about the project export. And when we're talking about the turnkey project, it's basically the project where the contractor is going to design, construct, and install and deliver the project fully ready for operation purposes, right? And buyer simply needs a turn the key so as to start the operations. That's a turnkey project. That's a turnkey project, and it may be having a single operator and single contractor is there, and there should be the complete responsibility of the particular contractor related to design, construction, installation purposes. So that's about the turnkey project. So turnkey projects are those particular projects which involve supply of equipment along with the related services like design. So whenever we are talking about the design, construction, installation, that will be the all responsibility of the particular contractor. So that's a turnkey project. And further construction project means what? Like where the civil structure is also to be constructed. Civil structure is to be done. Civil work is to be done, right? So supply of the construction material equipment is also there. And when we are talking about the funded facilities, it means like the pre-shipment credit is also available so that we can be procuring the goods from the local suppliers. Pre-shipment credit will be available, like in foreign currency also, that we have to import the raw materials from the overseas supplier also. So it may be the PCL in Indian rupee or the pre-shipment credit in the foreign currency, so that the raw material can be procured. Like in case of rupee, the raw material is to be procured from the domestic supplier, right? And in case of the PCL foreign currency, the raw material is to be procured from the overseas supplier, right? So that's a funded facility where the PCL will be given to you. So that's a funded facility. So one, it's like the funded facility, and the second one, it's the non-funded facility. Now, in case of the funded facility, the direct outlay of the fund is there, and in case of the non-funded facility, the direct outlay of the fund is not there, right? So that may be the case. So when we are issuing the guarantee, when the Exim Bank is issuing the guarantee, definitely there is no fund involved as such. So that's a non-funded facility that will be available. But in case of the funded facility, the funds might be available in Indian rupee or in the foreign currency in the case of pre-shipment finance or post-shipment finance. Clear with it? After that, it's about the other services and the programs which are basically provided. Like I told you that the consultancy and the technology services, support services are provided. Overseas investment finance is provided. Like let's say the corporate wants to invest money outside India, or they are going to have a joint venture outside India, right? So Exim Bank is going to provide the equity finance for the particular case. Or let's say there is a company ABC which is going to invest into the equity of the company abroad, XYZ company which is abroad, right? So in that scenario also, the finance might be given by the Exim Bank so that they can be holding the equity in another company. And other than that, the import loans are given. Like I told you that you're going to give the buyer's credit. So you're basically lending the importer so that they can be importing the goods and services from from the Indian exporters. So that's the case. And international merchant banking services are also provided, like foreign currency settlement and advisory services. And the fifth one is quite important because related to this, the question has already been asked. It's about the EMF, that is the Export Marketing Fund. So Exim Bank is actually the nodal agency for the scenario of the EMF. EMF is what? Kindly note it down. EMF is the Export Marketing Fund. And for this particular purpose, the Exim Bank is the nodal agency. What is EMF? EMF is a financial assistance program, right? So as to support the Indian companies, like when the Indian companies are entering the export market, they want to basically promote the Indian products outside India, right? So in that particular scenario, the Exim Bank is going to provide a financial assistance to the same. So the objective is very simple, that we want to provide the assistance to the exporters so that they can be taking up with the marketing activities outside India, so that they can be expanding the presence outside India. Clear? So that's about it. So that's about the EMF, and the Exim Bank is the nodal agency for this. And this is basically designated by the government of India so as to manage the export marketing fund to accelerate the export growth. Clear? Then after that, it's about the PLI. Now PLI is product liability insurance. PLI is the product liability insurance. Now what is product liability insurance? Now let's say you have exported a good from India, right? Now in foreign countries, people are very much aware that they do file the cases that say this product is hazardous or this product is not good for us. Now there might be a claim arising on you. You might be losing the particular case where a claim might be arised on you, right? So that may be the case. That may be due to the defect or problem in the product that has been exported, right? So this insurance related to the product liability insurance is going to provide you protection, like if there is a injury or death or property damage to the buyer or to the third party due to some product, right? And if the exporter is selling goods in international market where the legal liability risk is also there, definitely this insurance is a must. Then it is a export vendor lending program, export vendor development lending program, that is EVLDP, EVDLP. It is EVDLP, that is the Export Vendor Development Lending Program. Now, EVDLP is actually a financial assistance scheme. So this is also what? This is also a financial assistance scheme which was introduced by the Exim Bank itself, so as to support the Indian companies which are supplying the goods and services to export oriented units. So if a Indian exporter is going to export the goods or services to the export oriented unit, in that particular scenario, the Exim Bank will be providing assistance to the exporter, and further, that's basically there so as to develop a strong vendor base in India, a strong vendor base in India. So it could be related to the engineering components, like let's say the exporter is to provide the raw material inputs, or it may be related to the intermediate goods, right? Or it may be related to subcontracting service. So when basically we are the exporter is acting as a vendor here, exporter is going to act as a vendor here. The Exim Bank will be uh, interfering in the same and will be helping so that vendor space can be there in India, because more the vendors here in India, more the exports will be there, because export oriented units are going to make the exports in trillions or in billions. Definitely very high opportunity would be there in that scenario. Okay, so that's about the EVDLP. Further after that, it's about the Exim Bank line of credit program for other countries. Like I've already told you, like what is line of credit? You want to increase the imports from the other countries. Now you'll be providing a LOC, that is line of control. So line of control is actually what? It's a pre-approved credit facility. If we are talking about the line of credit, it's a pre-approved credit facility. It is a credit facility which will be provided by the Exim Bank to the foreign country, or let's say to an institution. So it will be allowing that you can be, through this LOC, you can be lending the amount to the persons in your country who will be importing the goods from India. So that's about the LOC program. Then it's about the Reserve Bank of India, the role and the exchange control. So there have been different regulations by Reserve Bank of India in this case, right? So first thing that we are going to learn about, that Reserve Bank of India exercises its power through the FEMA, that is a Foreign Exchange Management Act. And RBI is what? RBI is a central bank, which is basically responsible so as to regulate the foreign exchange transactions, so as to maintain the stability of the external sector in the economy particularly, right? So what are the major objectives related to the exchange control? So whenever we are talking about the exchange control management, what are the major roles or objectives related to it? We want to maintain the stability of the foreign exchange market, and we basically want to ensure the proper utilization of the foreign exchange resources. We want to promote the correct BOP, right? And definitely RBI is the regulatory authority who is responsible for implementing the foreign exchange policies, who is basically responsible for implementing the foreign exchange policies, and also so as to monitor the cross border transactions, right? Now if you're talking about the RBI, so RBI is basically empowered so as to under the statute of control, and so as to regulate the foreign exchange reserves and the policies in India. So it is having the responsibility so as to maintain the external value of India. That is also the duty related to it. Now, I have already told you that previously it was FERA, which was replaced by the FEMA in 1999, which was basically effective from the April 2000, from the June 2000, sorry, right? So what is the objective of FEMA here? Now, what is the objective of FEMA? So it basically empowers the Reserve Bank of India, that we want to facilitate, because we do not want to regulate, we want to facilitate the trade and payments, and we want to give the liberty so that the market forces can be deciding that what the prices would be and how it will be dealt with. So many liberties have been given under the FEMA, that is a Foreign Exchange Management Act, for the current account transactions, for the capital account transactions, for investment abroad, and also related to FDI, FII, right? Many of the regulations have been basically, because our scope is changed from regulations to the management part, right? So first one, it's about the FEMA regulations. So as per the section 11.1, RBI is basically empowered that they can be giving any direction with regard to making the payment or doing the payment. They can be stopping any person, resisting any person that you cannot be doing so something, or let's say they can be asking for, or they can be giving any direction, they can be giving any new rule, regulations, notifications under this particular section. So RBI is actually empowered under the FEMA that they can be giving any direction to any of the person who is dealing with the foreign exchange in India. And let's say RBI basically gives the directions and you're not basically following it, right? Or let's say if there was some direction which was given by the RBI under the FEMA and you're not complying with it or your acts are in contravention with it, in that scenario, penalty will be imposed, which may be extended up to rupees 10,000. So penalty will be imposed, which may be extended up to rupees 10,000. And let's say if the contravention is continuing contravention, in that scenario, penalty of rupees 2,000 per day will be imposed upon you. And previously, the offenses were compoundable to be the criminal offenses under the FERA. But now the offenses are compoundable to civil offense only. Those are compoundable to civil offense only under the FEMA. Like a penalty will be imposed upon you. And there are so many returns which are to be submitted, to the Reserve Bank of India. And let's have a look at these particular returns which are to be submitted. The first return, it's about the R return. The first return, it's about the R return. So R return is basically the fortnightly return. It's a fortnightly return so as to report the foreign exchange operations of the banks. Related to the foreign exchange operations of the banks, this return is to be filed. So it would be related to the purchases and sales of the foreign currency. And it is to be submitted by the authorized dealer category 1 bank. The second return, it's about the BAL. It's about the BAL statement. That is a balance statement. So whatsoever the balances held in the foreign currency accounts, those are to be reported. Then it's about the Stat 5 and it's a periodic statement. So the data on transaction related to FCNR bank account, that is to be reported. So Stat 5 is going to provide the information on deposits mobilized, withdrawals, outstanding balances. Further, it's about the Stat 8. And Stat 8 is also periodic return, but it's related to transactions in NRE and NRO account. NRE is non-resident external rupee account and NRO is non-resident ordinary rupee account. Stat 8 is related to it. Further, NRD CSR. It's about the NRD CSR, that is non-resident, and for the deposit consolidated statement return. Means whether it is related to NRE, NRO, FCNR bank deposits, those all consolidated report is to be submitted. That is NRDCSR. NRDCSR. Further, it is IBS. The sixth one, it is the IBS, that is International Banking Statistics. International Banking Statistics. Quarterly, this is to be submitted related to international assets and the liabilities. Related to the international assets and liabilities, this is to be submitted. For the statement of remittances, now whatsoever the statements have been remitted so far in the particular month, the statement is to be submitted because there is a limitation. There is a threshold related to individuals that more than 2,50,000 USDs per financial year you cannot be remitting. So that is to be taken care of, right? And reporting related to outward remittances is to be submitted. Further, the eighth one, it's related to the statement of trade credit. Now the trade credit is related to what? Let's say we are talking about the buyer's credit as well as the supplier's credit. So monthly reporting is to be done when the credit is raised for the import purposes, right? So that is to be reported. Further, it's about the XOS statement. Now, what is XOS? Like this statement is going to track the delays in export realization. It's going to track the delays when you have already exported, right? And you're not going to receive your payments, right? So it's going to track the delay in export realization. That's the actual statement. It's a half yearly statement. For the BEF statement, that is bill of entry. So when it basically is going to help the Reserve Bank of India so as to ensure that the foreign exchange which is used for the imports purposes, right? there has been an actual import. There has been actual an import. And for that particular scenario, the bill of entry is to be submitted. And BEF is actually related to the bill of entry statement only. It's related to bill of entry follow-up statement. The full form is the bill of entry follow-up. So F is for follow-up and BE is basically for bill of entry. Let me write the full form. It is bill of entry follow-up statement. Clear that? And further, the next statement, it's about the FAMIS, that is Foreign Exchange Management Information System. So it is Forex MIS, that is FAMIS. So daily reporting is to be done related to the foreign exchange purchases, sales, interbank transactions, dealer positions, that is to be reported. A daily return, we can say. A daily return, we can say. So these are the 11 reports. The R return is related to the foreign exchange operations of the banks. BAL statement is related to the Nostro or Vostro balances, right? And Stat 5 is related to FCNR bank transactions. Stat 8 is related to NRE, NRO related. NR DCSR is basically related to the consolidated NRI deposits. IBS was related to the international assets and liabilities. And statement of remittance is related to the LRS. And statement of trade credit is related to the buyer credit and the seller's credit. XO is related to the export bills outstanding. And BEF is related to what? It's related to bill of entry, right? Imports without bill of entry, that is to be reported. And FAMIS, that's the foreign exchange, MIS, that's related to foreign exchange dealing room operations, right? Now, if we look at the frequency simply, I'm just going to write the frequency now. The R return is on fortnightly basis. The BAL return is basically the periodic statement. This is a periodic statement that is to be reported. Start 8 is also a periodic statement like on monthly basis. Start 8 is also monthly basis statement. NRD CSR is also monthly basis statement. The international banking assets is basically quarterly statement. The statement of remittance is monthly statement. Statement of trade credit is also monthly statement. XOS is half yearly. BEF statement, if we're talking about, it's also periodic statement, but it's a half yearly statement. And FAMIS is a daily statement, daily data. Clear with it? Understood the part so far? Do confirm at the earliest. After that, we are going to learn about a very important topic, that's about the capital account transactions and the current account transactions. Now, what are the capital account transactions? I've already given an idea related to the capital account transactions. Now, if a transaction is going to alter the person resident in India, right, and their assets, liabilities, or contingent liabilities outside India are going to change with such transaction, or let's say the NRI is doing a transaction and their assets, liabilities, or the contingent liabilities in India are going to be changed due to such transactions, those transactions are said to be the capital account transactions. And these capital account transactions are majorly, let's say, for the investment purposes. These may be for the borrowing purposes. Let's say if you have borrowed some amount, if a ECB was issued to you, external commercial borrowing was issued to you, or you have done some lending. So it could be related to investment, borrowing, lending, or it may also be related to transfer of the capital assets. Transfer of the capital between the residents and the non-residents, that can also be there. So that's amounting to the capital account transaction. Like if FDI is done, that's a capital account transaction. So if it is related to FDI, if it is related to foreign portfolio investment, if it is related to the ECB, external commercial borrowing, like I told you, or let's say if you have acquired a property here in India, that is amounting to what? That is amounting to the capital account transaction, right? And in certain cases, the capital account transaction is fully allowed, like partial capital account convertibility is there. Like some restrictions have been imposed on the capital movement, and in some cases, the no restrictions are there. Like if some transactions related to the FDI, there might be some restrictions related to it. So it's about the complete convertibility on account of the capital account transaction is not allowed. That's not allowed. Clear with it? So that's about the capital account transactions. And what about the current account transactions? So any such transaction which is not the capital account transaction, that would be amounting to the current account transaction. That's a simple definition I can say, but if I want to explain completely that what the current account transactions are, then you should be understanding one particular point. So if the transaction is related to day-to-day trades purposes, day-to-day service purposes, let's say if you want to send some money for trade in goods, services, or let's say if you want to make some payment related to visit outside India for travel expenses, for interest payment, remittances, for education expenses, for family maintenance purposes. So those will be what? Those will be the current account transactions. Those will be the current account transactions. And the current account transactions are fully convertible for the allowed purposes. Like there are three schedules. In case of the transactions, we are having the different schedule. We are having the schedule 1, schedule 2, and schedule 3. Schedule 1 actually deals with the prohibited transactions. This is related to prohibited transactions. And when we are talking about the schedule 2, where do require the approval from the government departments? Approval is basically required. These transactions can be done, but after the approval from the department. And further, schedule 3 is basically related to the automatic route transactions. Like you do not require the approval from the Reserve Bank of India up to the threshold limit. So no approval up to the threshold limit. Above the threshold limit, the approval might be required, but up to the threshold limit, no approval is required. Like in the case of LRS, what is the limit? Do answer at the earliest. In case of the LRS, liberalized remittance scheme, if we're talking about, what is the limit? It is USD 2,50,000 under the LRS. The facility which is available for the resident Indians, the limit is 2,50,000 USDs per financial year. This limit is available. Now there are so many facilities which are available for the residents also. Like I told you about the particular point that if you want to get the foreign exchange, you can be giving up to rupees 50,000 in cash, right? And further also, let's say if you want to purchase the foreign currency, you can be doing so. And the release of forex beyond the limits mentioned below basically do require the RBI approval. Otherwise, you can be giving 50,000 rupees cash, up to rupees 50,000 in cash, and further can be taking the foreign currency. That is allowed. So as per the FEMA, the Indian residents are basically allowed that they can be buying or selling the foreign exchange from the authorized dealers and the full-fledged money changers. That's allowed for the current account transaction purposes. So whatsoever the permitted current account transaction purposes, for that particular purpose, if the resident Indians wants to basically buy or sell the foreign exchange from the authorized dealer category 1 bank or the uh, full-fledged money changers, that is allowed. Now, under the LRS, the scheme is available only and only to the residents, not to the NRI person. NRI person cannot be availing the LRS scheme. And LRS scheme cannot be availed by even the LLP, not the HUF. Those are not basically can be participating under the LRS scheme, right? The corporates cannot be participating under the LRS scheme. So under the LRS scheme, if you want to basically take some money with you when you're going for private visit, or for let's say gift or donation purposes, if you're going abroad for the employment basis, right, or for immigration basis, or let's say you want to send money outside India for maintenance of your families or relatives, you're going for some business trip, you're allowed that maximum cumulative aggregate transaction can be done up to 2,50,000 USDs per financial year. It's not about the frequency. You can be sending in 10 transactions or 100 transactions, but the total aggregate amount should not be exceeding 2,50,000 USD combined manner. In a combined manner, that should not be exceeding in that such manner, right? And also, let's say if you basically want to send money, remit money for the medical treatment purposes, that is allowed. And even if the amount is exceeding 2,50,000 USD, and you're having a slip from the hospital that a tentative expense can be exceeding 2,50,000 USD. Even you can be remitting more in that case. And person who will be acting as an attendee, that can also be taking along 2,50,000 USDs, right? And if you're basically student for pursuing the studies abroad and university says no, the amount required is more than 2,50,000 USDs, that is also allowed if the university has issued some letter based upon that, right? And also if it's related to small value remittances, the transactions which are not exceeding the 2,50,000 USDs, you can making such payment. You can making some such transaction. Clear with it? Further after that, it's about the other important aspects of the forex. So what's are the forex which is going to be purchased by the resident Indians? If it is not utilized within a period of 180 days, it is to be surrendered. It is to be surrendered, right? And let's say if you want to keep money with you, you can be keeping the foreign currency notes equivalent to USD 2000, not more than that. So if you want to keep the forex with you, you can be doing so, right? You can be keeping forex up to USD 2000 with you, but not more than that. You can be depositing in RFCD account also, right? So that can be done, but not more than USD 2000 purposes. And for what particular purpose you have taken the forex, you should be utilizing it for that particular purpose only. And if it is not utilized, then it is to be surrendered after 180 days. It is to be surrendered to the authorized person. And if you want to take money along with you, forex along with you in the form of foreign currency notes and coins, you can be taking along up to the amount of 3000 USDs. For Libya, Iraq, Nepal, Bhutan, right? There are limitations related. Like for Libya, Iraq, the limit is USD 5000. If you're going for Hajj pilgrim, your Hajj pilgrim, then the amount allowed is not no limit related to the foreign currency notes and foreign currency coins, right? In that scenario, there is no limit related to it. But otherwise, if you're going to any other country, you can be taking along in the form of foreign currency notes and coins, US up to USD 3000 or equivalent foreign currency. But if you want to take more amount, you can be taking it in the form of the traveler check or in the form of the bank demand draft. You can be taking along much more money with you. That's allowed in that scenario, right? So other topic, it's related to domestic currency. Domestic currency. So if you want to take along with domestic currency, yes. If you're taking the lower denomination of 100 rupees or lesser denomination than that, then there is no limit if you're taking money to Nepal or Bhutan, right? If you're taking the denomination of rupees 100 or the lesser denomination to Nepal and Bhutan, then there is no limit. But for other denominations, the limit is 25,000 INR. 25,000 INRs. And for all the residents and the non-residents, except the citizens of Pakistan and Bangladesh, they can take out the Indian denomination, that is allowed. And if you're having the unspent foreign exchange, you can be keeping along USD 2000. I've already told the point to you. You can be retaining up to USD 2000 with you, but not more than that. That's an optional thing, right? And if you want to surrender, you can be surrendering to the authorized dealer within 180 days. You know that you can be utilizing within 180 days, and after that you are to surrender the foreign currency notes and collateral checks. Those are to be surrendered, or you can be depositing up to USD 2000 in RFC domestic account if you want. Clear? Then after that, it's about the CDF. This topic is very important. What is CDF? This is a currency declaration form. So let's say you went abroad, you are coming back, right? So a person can bring what amount maximum, right? So you can be bringing any amount of the foreign exchange. But if the amount of the foreign exchange that you are bringing in the form of currency notes and coins is up to USD 5000 or equivalent of the same in another currency, then no need of filing the then there is no need of filing the CDF, currency declaration form. No need related to it. But if you're basically coming along with the foreign currency where the currency notes and currency coins are exceeding 5000 or USD 5000 USDs, right? Or let's say you are having the traveler check plus foreign currency notes and coins exceeding 10,000 USDs, then in that scenario you have to file the currency declaration form with the customs authority or with the airport of arrival, right? In that scenario, like if you're having the currency notes and coins only greater than 5,000 USDs, or the combination of foreign currency notes and coins plus traveler check more than 10,000 USDs, then the currency declaration form is to be declared, right? And if you're making the remittances up to USD 25,000, right? And if you're filing the form A2, right? In that scenario, no declaration is to be given. No declaration is to be given. And further, it is to be preserved for the period of 1 year by the or by the particular authorized dealer bank for the inspection by the auditors. Clear with it? So that's all about today video. I hope that you must have understood all the points so far. And definitely we'll be covering the chapter number 8 in the next video, and we'll be starting the chapter number 9. And after that, we have to start the module C. So make sure to like this video and further share this video. The next video will be having tomorrow at the same time, 9:15 p.m. in the evening. And further, if you want to get the CAIIB early bird pack or CAIIB English pack, simply just do WhatsApp CAIIB to the number 83609 44207. Under this particular pack, you'll be getting the full course videos, chapter-wise previous year questions, mock test, mega test, PDF notes, and everything will be covered, which is very much useful and informational, and definitely will be helping you a lot so as to clear the CIB exam in the very first attempt. So make sure to go for those particular video courses. Simply just WhatsApp the CIB to the given number, and that will be all. Thank you so much, and see you again.